The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 9 a.m. Eastern Time Friday morning. We got about 25 minutes to go until the start of trading, and we got markets picking up right where we've left off basically for the last few weeks. Higher territory, record prices almost across the board. We got the S&Ps right now up 10 points, trading at 41.72. We got the Dow futures up 79 points. Dow futures just above 34,000 as we speak. 34,006, up 87 points on the session. We got the NASDAQ 100 above 14,000, up 15 points right now at 14,029. And we got the Russell positive as well. Russell not in record territory. Russell trading at 2262. We're about 100 points off the highs, all-time highs that is in the Russell versus the Dow all-time highs. NASDAQ 100 all-time highs, S&P 500 all-time highs to kick off Friday trading. Jumping around to commodities. Whether you call it a commodity, whether you call it a currency, Bitcoin pulling back a bit from the lofty highs it had earlier this week with Coinbase going public. We got Bitcoin down about $3,000, still above 60,000, though 60,865. We'll put Bitcoin on a little 15-minute. You see the highs made Wednesday. Interesting, Wednesday. Coinbase goes public. We're about $5,000 off the highs we had on Wednesday. The acceleration really began at about 10:30 last night. We're trading about 64,000. Bitcoin, 60,870. We're jumping around to other commodities. Crude down about 10 cents at 63.61. Quite a pop this week in crude. Wednesday, you saw it accelerate from $60.38 up about $3. We got gold up about $11 to $17.78. Taking a look at a 15-minute bar on gold, you can see the action. Yesterday, we charge higher from about $17.34. We make it as high as $17.69. Today, we're trading up $11 to $17.78. 1,800 within a reach of gold. Silver is up 27 cents at 26.23. Notes and bonds. How about a little lower price and higher yield, pulling back from the escalation we had yesterday? We got the 10-year down 13 ticks. We're looking at a yield right now of 1.59% on that 10-year. We were as high as 132.22. We're trading at 132.08 right now. The 30-year is down a full point and 13 ticks. Look at that sell-off, right? From right where we were at about 3 p.m. yesterday, you were at 159.01. We're trading at 157.19, and we'll pull up the VIX as this market just goes positive territory across the board. We got 1630. Very real chance we might get a 15 handle on the VIX today as we come into Friday trading. All right, what else we got going on? Let's kick it off with some earnings. Let's kick it off with one of the banks, and we'll kick it off with a loss having to do with risk. Morgan Stanley, almost $1 billion hit on the Archegos blow-up. So Morgan Stanley surprised investors with a $911 million loss tied to the collapse of Archegos Capital, staining what was otherwise a record quarter for revenue and profit. So we got a bunch of bank earnings this week. They all crushed it out of the park. Morgan Stanley follows that as well. The current quarter, now here's where they talk about Archegos. The current quarter includes a loss of $644 million related to a credit event for a single prime brokerage client, not mentioned by name, but you do the math, and that's who it is. And $267 million in subsequent trading losses through the end of the quarter related to the same event. Morgan Stanley said Friday in their earnings, the hit related to Archegos. The disclosure leaves Morgan Stanley as the only major U.S. bank to be nursing losses from the flameout of Bill Hwang's family office. New York-based Morgan Stanley, one of the early backers of Archegos, despite the legal taint tied to Hwang, who had been accused, and I believe he pled guilty, yes, in 2012 to insider trading. But across that, strong numbers in a big way. Let's see where we are. So they mentioned that they're higher. Morgan Stanley in the year I'm talking about. Look at this volatility. Pretty interesting. We're a little bit higher this morning, 81.15 from 80.82. You got the conference call already going on. It had spiked as low as 79.50. Really remarkable when you think about the risk protocols of some of these companies. I mean, it's not that it's simple math, but it's pretty simple math in terms of we all know how margin works, right? You put up a certain amount of capital. The bank lends you more capital to trade with the idea that they make you put up enough capital at the onset that if it pulls back, they can sell that position before they are personally at risk for your losses. I don't know how you don't have your risk in tow where you just don't have enough capital to cover the trades that are going on, especially to the tune of about $1 billion. Now, they're going to be looking into Archegos in a big way, seeing how it works. But nonetheless, what is going on that you just have one family office that can pummel one of the biggest banks in the U.S. to the tune of almost $1 billion loss because of the ratcheting up of margin that these banks allowed one family office to achieve. Remarkable, it keeps persisting, but you got Morgan Stanley higher nonetheless. Strong numbers in a big way from Morgan Stanley out with their numbers this morning. And I was trying to get, I guess they don't have the numbers pure in here. We'll pull up their numbers in a moment, though, but $911 million is where they go in terms of, let me just pull up the number in terms of where they are in terms of the earnings. So the bank posted first quarter profit of $4.1 billion, $2.19 a share. They excluded merger-related expenses, adjusted profit $222. Company-wide revenue surged 61% to $15.7 billion. They beat analyst estimates by $1.6 billion. Not a bad deal when you got to write off $1 billion if you're taking in revenue to that tune. Fixed income trading desks produced $2.97 billion in revenue, almost $850 million more than what the analysts were looking for. Equity trading produced almost $2.9 billion in revenue, or $170 million more than the estimates. Investment banking revenue jumped 128% to $2.61 billion, almost $500 million more than the estimates. I mean, that's remarkable. Investment banking, they were looking for about $2.1 billion. They come in at $2.6 billion. Percentage-wise, that's more than a 20% beat. Remarkable. They announced $20 billion in deals last year they go over. Wealth management revenue in the quarter jumped 47%. Just staggering numbers across the board. So they take in $1.70, 68% higher than a year earlier. Revenue, we covered $14.1 billion. But nonetheless, you pull this thing up on a daily, it's already been a rocket ship. We've traded from November 1st, $46. We're almost double that price, sitting at $80 on Morgan Stanley. You back it up on a 3-year weekly. We were sitting at about 56 before the start of COVID. You collapsed to a low of 27. We're currently sitting at almost 81 from Morgan Stanley. Checking out some of the other banks that reported this week. We'll put it back on a daily to see the run they've had. Citi sitting at about $72. Look at some volatility for Citi yesterday. Check out that acceleration to $75. By the time you reached about 11 a.m. in the morning, you were down to $72. This morning, though, Citi is higher, up to 73. JP Morgan, 153.17. They were out with their numbers early Wednesday. We're basically back to right where we were prior to those numbers for JP Morgan. Bank of America out with their numbers. You trade from 41 to 38. You're sitting at 39.16 right now. And we'll wrap it up with Goldman Sachs. Quite an acceleration for them. They come out with their numbers Wednesday morning. We're a solid $12 above where they were coming into those numbers at 341. You put Goldman on a daily, quite a rocket ship. Next stop might be 356, the all-time highs for Goldman just made earlier, about a month ago, March 17th for Goldman. All right, folks, we got about 15 minutes to go until the opening bell. We got S&Ps trading at 4169, 4200. We got a shot at 4200. We got 4,200 in the S&Ps possible. We got 14,000 in the NASDAQ 100 right now for all-time highs, and we're sitting a hair under 34,000 in the Dow. Stay tuned, folks, when we come right back after the break.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We have the S&P is climbing. We're up about 10 points right now at 4172, bumping up to the highs we had pre-market. We're about a point off that level right now. We get the NASDAQ positive by about 18 points. We get the Dow positive by almost 100. We're pushing literally to the tick highs as we speak, 34,021 in the futures. And we get the Russell positive as well. Not often you see all the indices coming in hot to the opening bell with about 11 minutes to go until we hear that opening bell. All right, what else we got going on in the markets? We got housing starts this morning, a big number. Housing starts. How about residential starts jumping 19.4% last month to a 1.74 million annualized rate, according to government data? I mean, look at this chart. Talk about a bonanza, man. Construction of new U.S. homes surged in March, the highest since 2006. Look at that decline and the collapse of 2008. It's been ramping up ever since. There's your COVID collapse. We go from 1.6 down to just under a million. Housing has just been on fire. Supply is a big problem, so housing builds really coming too. Applications to build, a proxy for future construction, increased 2.7% to an annualized rate of 1.77 million units, while the number of one-family homes authorized for construction but not yet started, so you're talking about backlogs there, rose to 124,000 in March, the most since May of 2007. It just keeps going. A report on Thursday showed a measure of home builder sentiment improved Thursday, suggesting firms see steady growth in the housing market heading into the second quarter. We get March data on both existing and new home sales released next week. So getting into a little bit of the statistics of some of these numbers. So single family starts rose 15.3% in March to an annualized 1.24 million, close to the highest since 2006. Multifamily starts, which tend to be volatile because you're talking about apartment buildings and condos, increased almost 31%. Construction rose in 3 or 4 regions, led by a surge in the Midwest and large gains in the Northeast and the South. The number of all types of homes authorized for construction but not yet started rose to 217,000 in March, the highest since August of 2006. We all know what happened in 2007, 2008, and 2009. Some lofty numbers there. You see where we came from in terms of the buildup. But, man, it's a different environment right now in terms of what you have going on, in terms of the number of Wall Street players that got into the housing market, the number of homes that got scooped up as a part of that, and now the supply that has been dampened in a big way. Little bit of a different story as we go into 2021 versus these numbers when they were coming out in 2007, 2008. Of course, course, we had the debt crisis going on in terms of just lofty valuations. I'll find the word. And people were flipping houses left and right. 2007, 2008, everybody was buying a house that you could. Maybe you weren't qualified for that house, right? The cards came tumbling down. Not quite the scenario that we're looking at right now in this housing market, as it is on fire. People are moving. They can work from homes. People spending more money on their home. People buying second homes with interest rates so low still. Nonetheless, big numbers in a big way on that housing start number. All right, what else we got looking at? Beyond Meat. How about Beyond Meat and Impossible are going to be slashing prices? Interesting to see how this shakes out in terms of the rivals took different approaches to their distributions, which has only escalated the stakes. You got both of them going to be raising their prices here. Interesting article over on Bloomberg from Bloomberg Business Week. Beyond has been public for almost 2 years. I can't believe that. I remember when they first went public and this thing went bonanza to the upside. We'll put it on a 5-year daily to put it all. Talk about rushing to highs out of the gate. You go from $45 to $240. Now, I remember comparing the valuation of Beyond Meat at $240 to a company like Tyson at that level. So you're going back to July of 2019, and it just made no sense, folks. All right, you have a product that Tyson was going to get into, and it's just a comparable. It's the way you want to think about certain things, right? You had a company like Beyond, great product, great industry in terms of growth, in terms of alternative meats, alternative plant-based products, etc. Nonetheless, we haven't seen that price since then. We made it all the way up to $220, and just like that, again, this thing is back to $137. Volatility everywhere, but right now, you're talking about right now, I think it's going to pull it up. What are we looking at? We're looking at an $8.6 billion company right now at $137. So you're approaching, I mean, basically almost double, right? So if you're at 8.6, you were about a $15 billion company. I think it's TSN. Is that Tyson? TSN? Yes, it is. TSN versus Tyson. You went back. Now, Tyson, we're almost back to the highs we had prior to COVID of 94. I mean, we all know what the plants that were right when COVID was first spreading. Of course, the meat plants and stuff like that, you know, they were getting shut down. Of course, they were very busy, but it's very difficult. You have a lot of workers working very close quarters. You had Tyson collapse from 94 to 42. Since then, quite a climb to 78. Now, you pull up Tyson, and this was my example. Tyson's a $29 billion company right now, right? We're all familiar with Tyson, okay? They're a $29 billion company. You back things up to basically July of 2019. Oh, no, that's not. Excuse me. Back it up to July of 2019. Perfect analysis. We're sitting basically at the price we were trading at. So Tyson is a $29 billion company. And at that point in time, you had Beyond Meat being like a $17 billion company. Meanwhile, Tyson has infrastructure of delivery completely in place. They're going to come out with a similar product, et cetera. Sometimes you just want to keep those things in comparison, because there was no way in my mind that Beyond Meat was just going to take off and accelerate far past a company like Tyson Foods. Doesn't mean it's a guarantee, but we see how it plays out. You got Tyson sitting basically right where you were at that level. But man, I imagine we'll get back to $94 eventually. Quite the run Tyson had. Look at that. From December of 2018 at $52, almost doubled it by the time we got into January of 2020 before COVID hit, to $94. All right, jumping around, keeping going. We'll jump to, how about China and their growth? Big numbers. The economy grew 18.3%. This number out last night in the first quarter, slightly missing expectations. The expectation was for 19% in China. GDP soared 18.3% in the first 3 months of the year. The surge in growth comes off a contraction in the first quarter of last year. We're all learning new terms, right? Base effect. Base effect is like the vogue term right now. It should be, because you're getting year-over-year comps like we've never seen before, because we're all comping against the prior quarter, which was abysmal almost worldwide as the pandemic took its grip. Everything shut down. China, the earliest of that happening, but China really clamped things down in their own country, surged back in a big way. They were pretty much done with COVID in a big way, at least in some of those huge surges by like May, June, July, something like that. Let's see. Yeah, the economy shrank 6.8% during the height of the domestic outbreak for COVID last year, which is when they were benching it. So this year you got a rise. Nonetheless, strong numbers out of China in a big way, 18.3% GDP growth for their quarter. Okay, what else we got going on? We'll jump to some GameStop action. Why not? Roaring kitty. So Keith Gill, he was the one who was kind of the leader over in the Wall Street Bets Forum, talking about GameStop, the original. His options expiring today. How many has he got? 500 call options. Now, every call option, folks, is for 100 shares. So if you got one call option, you have the right to buy or sell 100 shares. If you got 500, then you're talking about 50,000 shares. In one of the contracts that got a lot of publicity, you're talking about options that expire today. I believe it's got a strike price of $12. How about that? That position, worth about $7 million, doesn't even touch the fact that he's got about 100,000 shares at $27. But boy, if you get into a stock that might be trading in the single digits and you get up to almost $500 and you settle at $150, you better be collecting some cash. GameStop shares trading at $156.44. Stay tuned, folks. We'll be right back for the opening bell.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and we got markets even higher as we come into the open. Talk about an acceleration. We got the S&Ps now up 15 points at 4177. We got the tech stocks, NASDAQ 100 pulling back a bit on the open. We're flat, call it at 14,014. The Dow catching a bit. Look at that acceleration. We hit 34,104 on the open, trading 34,097 right now. And the Russell catching a bit as well, pushing the highs we had on Wednesday. We're at 2269 right now. Bitcoin, 61,375. We got gold pulling back a bit from the highs of 1784. We're trading at 1774 right now, and we'll check in on notes and bonds right where we were basically starting off the show right now. We're talking about the 10-year at 132.09. Let's check out Coinbase in the third day of trading, which is sitting at 326. There's your volatility on the opening day up to 430. We trade to 310. We got an acceleration Wednesday night, probably off some of the news in terms of, I saw Kathy Wood out there for ARK, right? Talking about almost $250 million she put into Coinbase through her funds. You get an acceleration. This thing settled back to 325, but we're still talking about a company right now to get into the fundamentals. Do they have the fundamentals? It's loading. I mean, you're talking about an $80 billion company or something like that. Remarkable when you talk about where that Coinbase has been. All right, what else we got going on? Jumping around to some of the stories out there. Let's jump around. What do we got? Let's jump to covered housing starts. We could talk about the vaccine. We got Morgan Stanley. We got China. Yes, how about this story? Really interesting one out here. Kind of points to maybe some lofty valuations in the stock market. Not kind of what you want to see if you don't think a bubble's going on. Did you see the story out there yesterday about David Einhorn? So I guess he was out there in a letter to clients talking about this one stock in particular. And I don't know what's happening here, but it definitely points to a euphoria that makes zero sense whatsoever. You got a New Jersey high school wrestling coach is the CEO of a $100 million firm that owns one deli in New Jersey. Paul Marina, the principal head wrestling coach at Paulsboro, New Jersey High School, listed in financial records as the president of Hometown International, which owns a single delicatessen, as they put it. Hometown, and there it is. Check it out. There's a $100 million deli for you, folks. There it is, New Jersey. Check them out. Paulsboro, New Jersey. The company's shop did just $35,000 in sales combined over the past 2 years. Are the Reddit boys and girls on this one? Not sure what's going on, but nonetheless, it's valued at $100 million. I think this might bring us to the symbol. Yes, it does. HWIN is their symbol. Now, let's see how they traded off this news. So what do they, just go public or something like that? Is that what's going on? HWIN? No, they didn't. You went from $4 up to $14.50. I mean, you're not even trading yesterday. What is this? Yeah, not sure what's happening in the stock, but nonetheless, you're talking about things that make no sense in the market, folks. And it should wake you up a little bit when you see stuff like this, because somebody somehow is giving this thing a valuation of $100 million. And it just doesn't add up, kind of the same way that a GameStop might. The annual report shows that Marino, the treasurer and the director, has 1.5 million shares in the company with warrants for another 30 million shares. He owns 19% of the outstanding 7.8 million shares of common shares. On Thursday, it was at 13.50. That makes his holdings alone worth 20.5 million. Now, I don't know how you get out of this stock when it's trading 200 shares a day, right? It traded, what did it trade yesterday? 10,000 shares. And what's he got? Like 8 million, 30 million warrants, etc. Rarely has more than a few hundred shares trade, exactly. I don't know. Just be careful out there in the market whenever you see anything, like this, because it basically means the market's broken right now. And they might not be the only one if somehow a stock like that is able to climb. You see the pullback yesterday as people maybe wake up to the fact that there's no way a deli in New Jersey that's pushing $35,000 is worth $100 million. Nonetheless, somehow it's trading up there, but very, very illiquid. Would not touch that. But a little bit of a heads up when you start seeing things like that. Back to the markets. A little bit of a pullback in tech stocks right now. We got tech pulling back 13,985. We got the S&Ps holding steady at 10. Taking a look at the dailies. Let's go over some of the trends going on in this market. You take a look at the S&P. We put it on a daily. Can't deny it's in an uptrend. But, man, we're pushing the upper boundaries here. I mean, how many times can you just go higher on a continual basis? You back things up to March 25th. Okay, so we're talking about how many trading days since then? 4, 8, 12, 17 trading days we're talking about, all right? I'm just going back to March 25th, okay? And, again, 4, 8, 12, 16. Today is the 17th trading day, all right? And you only got 3 red days in there, and they're pretty muted days nonetheless. Can't go on forever like that, folks, okay? And when you put where you are in terms of bumping into the upper boundary line of the S&P, you pull up the Dow. We're now above that upper boundary line I have in here. You can see the peaks that we're going to, the Dow climbing above that level. You get the Russell, a little bit of a different story. As we climbed above that trend line, we've now been bouncing off of that trend line for support. NASDAQ, a little bit of a different animal. I don't have a trend line on there just yet. Maybe we're drawing to the top line. I mean, let's just see. Where are you going to draw that? Maybe you take these two alone. If you just take those two, maybe you take the bottom line in here, and that's kind of your trend line somewhere in there. NASDAQ may be bumping up, but not quite there. S&Ps, it's pretty defined, folks. It really is. Now, you put this thing on a 5-year daily to give yourself the full run off the bottom. And technical analysis is an art, not a science. Say it all the time. It's definitely true. Where's the top boundary line of this channel? You know, that's where your analysis may differ. You use your personal biases in the market. Now, what I like to do is kind of in my own head even just try and use an area of maybe what it would look like in linear regression to that tune. Okay, so I'm not choosing the exact areas that we're on. I'm choosing an area of linear regression, because you could say, okay, we're going to match up point A, we're going to match up point B. Whoops, excuse me, I'll back it up. I'll zoom it back in. I'll activate that drawing. You could say that you're going to line up the top two, right? But I don't think that's a fair representation at all of this channel line. I think a much fairer representation is that we maybe got a little bit out of sorts in September. We maybe got a little bit out of sorts in June of last year. But you subtract those two slight escalations out of the picture, and really you have a trend line that is probably somewhere in the neighborhood of more like that, right? We climb above a couple times. Maybe we don't quite reach that level a couple times on our escalation up. But, man, you can see we're bumping right in, to zoom in on the action, right into that channel line right now at 41.78. Especially interesting when you think about we're coming in to some of the biggest earnings of the market coming up. Next week, I think it's like $5+ trillion worth of market capitalization companies coming out with the earnings. And the week after that, folks, man, we get some big dogs, about 18 trillion. We get Apple, I think, Amazon. We'll pull them all up in a moment. Excuse me. But we get some big companies that week. Interesting that we got the S&Ps bumping up against that level as we come into some of the biggest earnings events out there. All it speaks to, folks, is lofty, lofty expectations in a big way. I mean, you just got to back things up to 3 months prior, okay, to see where we've come in the last 3 months. We're talking about April 15th, April 16th today. You back it up to about January 15th, and you're talking about the S&Ps up more than 10% over the last month, let alone where we came from in the beginning of November, where you're up almost 1,000 points, folks, from November when we started getting that first vaccine news. But, man, it's time for reality to set in. It's time to see some growth numbers to deliver for a 4,100
Are you
S&P.
in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. If you head on over to the front page of TFNN.com, Basil Chapman, you just heard him. Maybe he did his program a little early this morning, 8 a.m. till 9 a.m. We're going to replay that next for Basil's program coming up 10 to 11. So he just did that program live at 8 o'clock. That will be current. He was in there last night with his subscribers for 90 minutes, folks, with a webinar, dressing up the charts in the Chapman Wave. There's still time in terms of you can sign up for the opening call. That webinar will be archived today for all subscribers to the opening call. You can watch that over the weekend if you'd like. You can watch it as many times as you like. It's on your members page for opening call subscribers. That will be up there today as we get that archive available for all subscribers. But Basil's got about 10 archive webinars up there, folks. Great time to sign up over the weekend. Check out some of the archive webinars. Watch the one he did last night talking about the markets and charting live for his subscribers. And I encourage you to check that out. Still available on the front page of TFNN.com. All right, what else we got going on? Let's jump around to some specific equities in this market right now. Putting things back on a year daily, we'll pull it up to some of the FANG stocks. Amazon shares sitting at 33.73. Basically bumping up right to the upper boundary line of that consolidation Amazon's been in. Microsoft, talk about a rocket ship. Did we just make a new all-time high today in Microsoft? We sure did. Pulling back from that high, but $260, the high on Microsoft. Google shares just missing the high we had yesterday of 23.06. We're trading down about 0.1% right now on Google at 22.92. Facebook shares, we're above that consolidation, breaks out of that area at the beginning of April. Facebook trading at 305.81 right now. We jump to Netflix shares. Netflix trading at 546.03. You see the type of consolidations across the board on some of these tech stocks, right? Netflix really accelerated early during COVID. The market figured out, it's just back at even 3-year weekly, market figured out pretty quickly, and rightfully so, that there's no reason that this should pull back. You saw Netflix go from about 380 down to a low during COVID of 290, and then just like that, we were over $550 by the time of July, and we've just been chopping around at that price level since then, compared to the likes of Amazon. I mean, look how you jump to those two charts, right? Amazon, Netflix. Certain equities, the market just figured things out quickly, and then it's been chopping around since. So there's Amazon. There's Netflix. Pretty comparable, right? You pull back slightly, you accelerate higher. A lot of other companies looking like this as well. Point being, they've been consolidating for a while now. We're pushing from July. It's going to be May in about 2 weeks. You're talking about almost a 10-month consolidation here in some of these big high-flying tech stocks. That might be the nice push, the next push, I should say, as you look for some of these equities to break out of some of these consolidations. Amazon on the front of that radar, bumping up against about 3,400. We're sitting at 33.72. Let's jump to others. Tesla trading at 727, down about 1.5% right now. That's a weekly bar, so talk about an acceleration. Now that's your daily. Yesterday, Tesla had a high of 780 and a low of 728. There's some volatility for you. The day prior, we had a low of 710, the high of 763. Tesla trading at 727 right now. Let's jump to some of the airline stocks, see how they're trading. You got American pulling back from the lofty highs. We're trading at 22.21 right now. Delta shares, pretty similar action at 47.27. American, we covered. United Airlines, 56.73. Let's jump to some of the domestic. JetBlue, a little bit of a different story, bumping up to the highs. I mean, you got to back things up a little bit further to see where we were prior to COVID. We now have JetBlue sitting at 20.79, basically right where we were prior to COVID coming in. And we'll finish the airlines up with Love, which is actually above where we were prior to COVID. Taking a look at some of the cruise ships. Carnival, trading at 27.55. I tell you, folks, if you're looking for a long-term play in some of these, you know, it might be time. Now, that's a weekly. Let's put it back on the daily to see the action. We're right up near 30.63 where we were. These cruise ships will be back to where they were prior to COVID. They will. It's just going to take some time, folks. You know, when you talk about on the global spectrum as well, man, we got a long way to go until we really get out of this pandemic. Now, what I was trying to pull up, I believe we had the World Health. Yeah, COVID infection rate is approaching highest level ever, the World Health Organization. Now, this incorporates many many countries across the globe. Might not impact, you know, cruising especially, but we got some big numbers, folks, in a big way still going on in COVID. I mean, even in the U.S., we have some big numbers still going on. We have, in the U.S. alone, almost 200 million doses given so far. We're talking about 3.35 million doses per day for the vaccine. When you look at the number rising, you got to love the acceleration in terms of continuing to rise on the daily average. But in terms of bending the curve, in terms of where we are, in terms of cases, not quite there yet, folks. They got a lot of charts in here, but nonetheless, not quite there yet in a big way. But we will get there. And you're going to see these cruise ships, you know, come back. Just like you see JetBlue at prices we were at prior to COVID, just like you see Southwest prior to where we were in COVID. That's because domestic travel is about to be right back to where we were, folks. It is. The U.S. is going to be there in the next month or two. Flights are already filling up, right? Everybody wants to take their vacation. I'm starting to take a look at some of these. NCLH, Norwegian. I mean, Norwegian's got a long way to go from 28 to 59. But again, when you talk about some of these international cruise lines, they might take a little bit longer, folks. But as we've seen, time accelerates quickly. And if you're looking at a price point, you think these are going to get back to where we were prior to COVID. But boy, you got a long way to go for some of these in a big way. RCL. And even Royal Caribbean sitting at 86 from 135 off of a low of 20. All right, what else we got going on? Let's take a look at some of the commodities. We'll pull it back on a daily. We got crude trading at 63.18 right now. The high we had back to March 8th, 67.98. And let's take a look at gold, because gold, talk about catching a bid here. So we'll put this on a 3-year weekly just to bring it back to the complete collapse we had for COVID. You trade down to a low of $1,450 in gold. You rise up to 2,089. Really nice when you look for a risk reward here. The gold was down to 1,700. That's a 618 retracement on a Fibonacci level. That's the same area we had support going back to whether it was from April to about July before it accelerated higher into the highs of last August at 2,089. We again chopped around at that level from about March 1st. Again, these are weekly bars all the way until maybe the end of March. And since then, we're rising to 1,775. We're right at the 50% level. But gold really catching a bid. And 1,700 looks to be that area of strength, but quite an acceleration. Now sitting at 1,776 for the price of gold. And silver as well, quite the acceleration. Let's pull this off real quick. But silver, you're down to $11 at the lows of COVID. And basically, we've been chopping around. I mean, silver, you know, I would look at silver as a consolidation right now in terms of basically since August of last year, silver accelerates to a high, and we're sitting right in the middle of that area right now in silver, 26.16. The high around about 28. Yeah, we got a tail above it on that week. We have a few tails back here, but you can see we bumped up against that level a couple times and pulled back, and on the bottom end of this silver contract, you got about $22 with support in silver. All right, we get the S&Ps holding pretty steady. Look at that weekly acceleration, right? And that's when I talk about, you can see it. I mean, that's a pretty well-defined linear regression line of the upper boundary line and the lower boundary lines. And we've been within that level since April of last year. So you're talking about a full year uptrend in the S&P. And keep in mind, we're touching that upper boundary line, but that doesn't mean that you can't keep touching that upper boundary line as we did basically from November all the way through to February before we finally got a little bit of a pullback. Stay tuned, folks. We'll be right back to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. I got a chart here up of Caesars. We got a question in the YouTube Tigers Den talking about Caesars and their deal with the NFL. I think they have DraftKings and FanDuel in there. So pulled up the article here coming out last night after the bell. So NFL Inc. sports bet deal with Caesars, FanDuel, and DraftKings. Bottom line here, exploding industry in a big way. Gambling, folks, on sports, it's happening. You know, and whether it's you got New Jersey, New York, right, across the board. I think some of the other states as well, but it's happening, and it's going to keep happening. And the NFL, probably one of the biggest sports out there, people love to gamble on. What I find most amusing in this article I pulled out from the AP, not even familiar with it is, once one of the staunchest opponents of allowing people to bet legally on its games, the NFL on Thursday announced deals with 3 major gambling companies to become official sports betting partners. Well, yeah, they've been publicly against gambling on their sport for a long time, folks, but the amount of attention NFL games get because of gambling action on them, the NFL and NFL owners are very much aware of, and aware of how much money that puts in their pocket. Not surprising at all. Caesars, I mean, the tough part about this is that where do you get in? Right? We just went from prior to COVID at $70 down to $6. Remarkable. We're sitting at 94. You know, where do you get in? You can always dabble a little bit and build a partial position. Because rightfully so, I mean, Vegas, casinos, action, people are going to want to get out, folks. They're going to want to travel. Vegas is going to be bananas, I imagine, once things open back up and people want to really party like they haven't in a long time, let alone you combine, of course, the gambling side of things. I mean, we pull up DKNG, which is DraftKings. You see DraftKings, I believe that's when they go public, April of last year at 17. We make it as high as 74.38. We've backed off a bit. That's a weekly. On the daily basis, we're up about 2.7% on that news right now on DraftKings. One thing I'm going to add before we wrap it up, love to take a look at some Fibonacci numbers. Anytime I'm looking at a stock that's really accelerated, you take the low we had in November, the high, we're now below the 382. So on DraftKings, maybe you look for the 50% level at about $55 for DraftKings. Might be a nice level maybe to dabble in. But long-term, successful companies, folks. Gambling, it's just going to be exploding continually as states continue to seek revenue from that gambling operation. Thanks so much for tuning in, folks. Stay tuned. We got Basil coming up next and then live program.